So what are some of the initiatives currently happening in the space of environmental and social or sustainability reporting? Let's take a look. Integrated reporting is probably the big one at the moment. You're not required in this module to have an in-depth knowledge or even to be able to format an integrated report. But you should know what it is and what it's for. So there was an International Integrated Reporting Committee, IIRC, formed in 2010. And this one puts out the guidelines for integrated reporting. And note that how integrated reporting, how the acronym is presented, but it's presented within the two boomerang brackets. That's their decision. I don't know why they've done that. But it wants to be accepted globally as the corporate reporting norm, benefiting organisations, their investors and other stakeholders by enabling informed decision-making that leads to efficient capital allocation and the preservation of value. So that's, in their words, that's what they want it to be. It's very early and we don't quite know yet where integrated reporting is going to go, but it certainly hasn't reached the maturity needed to replace or augment the IFRS. In the accounting space, people have looked at the possibility of accounting for externalities. Externalities are the costs or benefits arising from the business's activities outside of the business. Now, the accounting standards currently don't allow us to recognise these because they're not within the operations of the business. And as you could imagine, clearly identifying, recognising and measuring these benefits or costs are difficult, or if not impossible to do, and to audit, to verify. And I think you could imagine the fun that some corporations would have by booking benefits from their operations. That would be very, very difficult to confirm by an auditor. However, I must say that the objective is worth looking at. And one objective is to calculate a sustainability cost or a sustainable cost, being the amount that an organisation must spend to put the biosphere at the end of the accounting period back into the state it was at the beginning of the period. In other words, what would it cost an organisation to render the environment that it operates in neutral? So if there is degradation in the environment, what would it cost to replace that and to return the environment back to the way it was? The obvious problem with that, of course, is if you've cut down 1,000 acres of trees during the accounting period, what's the cost of replacing trees that might be 20, 30 years old? So the ideal is an interesting idea. The practice is less certain. Climate change, of course, is the big issue facing communities, and if it's facing communities, then it's facing us as accountants. Activist groups are getting far more influential, and that means powerful, in the community right now. And they are proving to be quite effective in interrupting the flow of capital. And of course, if you want to be influential in the world of business, then if you have the power to interrupt capital flows, then people will start to take notice of you very quickly. There have been some economic responses proposed in response to global warming. Probably the most popular has been the cap and trade, where carbon credits are traded in an open market, similar to a share market. But a more direct approach by governments has been to actually tax carbon. So these are financial penalties placed directly against organisations based on their emissions. Both approaches are still very immature. They've been implemented in some places, notably not in Australia. And where they have been implemented, the benefits are far from certain. But in terms of pure economic approaches to placing prices on environmental degradation, these have been the most popular, most common approaches so far. And finally, social audits have also been a way that corporations can say to the community, look what good corporate citizens we are. So like all audits, a social audit is a formal process that lets the organisation properly review its performance and impact on the environment. And no doubt that beneficial or positive audits would certainly be released as part of a voluntary disclosure. So they are some of the key initiatives. You'll notice from your textbook that there is an awful lot written about these initiatives. And there's good reason for that. You'll notice that the author of the textbook has been quite prominent in publishing in this field. And for good reason. It's a very interesting field. It's very current. And for those of you who wish to look more deeply in your chosen profession as an accountant, this is a very good field to become aware of and to do more research in. So I hope you've enjoyed this module, and good luck with your studies.